Hi friends, I'm Kevin Shaji, and in this presentation, I would like to cover on various observations raised in SEBI's interim and final judgment of Seacoast Shipping Service Ltd. Seacoast Shipping Service Ltd is a public company which is into, of course, by the name we can understand, it's in the shipping business. Yeah. So what before going to the full presentation, I just want to give a trailer. So what is this? It's a story of fake sales, diversion of funds, and kidnapping that has never happened. So it's a interesting, very interesting story. I would like to cover. So based on presentation, what things I have covered for the presentation? I have covered SEBI's interim order, SEBI's final order, and various news articles that is in the public domain. So, when this company was incorporated in 1982 and is listed on BSE on August 23, 2019. It was pre-COVID time. And if you see the change in shareholding, if you see it change value of the shares, it is what do you call? You see there is huge variation in shares. Some because of COVID impact is there. Some because of they issued bonus shares because of which there is change in share value. We and some most important reason, if you see the share has gone so down because of what this is a real reason that we'll cover in the slides. So if you see there is so much change, what you call increase in total number of shares. Total number of outstanding shares almost increased to 40 times. It was just 22 lakh 45,000 in March 2020 and it is increased to 53 crore 86 lakh 80,000 in September 2025 because of various corporate action. It includes business takeover. Business takeover. They have taken over promoters holding promoters personal company promoters HUF company. Then they have issued bonus share, they have issued raised funds for cash, they have issued rights issue. All these things have resulted in increase in total number of shares outstanding. So in the financials, if we go in 2020, 2020, there is a very low top line of only 52 lakhs. It is suddenly increased to 43 crores. And it is slightly reduced, it is reduced to 127.8 CR and has increased again to 429.5357 CR. PAT is also reported 11 CR in 2021. It is reduced to 2.55 CR in 2022 and is increased again to 14.28 CR. Net worth is also comfortable level. It is year on year increasing. 45 CR, it is increased to 47 CR, it is increased to 61 CR, 61.99 CR in 2025, 2023. Net borrowing also, long-term borrowing also is not that great, it is not that big, it is reasonably okay only. Like they have maximum long-term borrowing of 10 CR. There is a huge increase in sales. So BSE has done its verification and all that, and doubt was casted to SEBI, all these things have happened. So SEBI has done investigation. SEBI's investigation report is very interesting. I would like to cover one by one. 1 minute. Sorry. Yes. Inflated sales and purchase. 61% of revenue from operations, 60% of operating expense in 2021 is with related party. The related party name is Seacoast Shipping and Marine Service and HUF of the direct managing director Manisha. So from now onwards, this HUF will be named as Seacoast HUF for simplicity. In 2021, entity took over the Seacoast HUF. So they made combined financials of both the entities. In the financials, it will be combined. So in the combined financials means they will be, if you combine the financials, then amount is paid, amount is not payable to Seacoast HUF, but it will be payable to the actual parties because consolidation means that an adjustment should be done. On analysis of payment as per books, service payment actually made by Seacoast Services Limited and Seacoast HUF, there are some observations. In 2020 to 2022, there is not a problem. In 2023, amount purchase that is made is 396 CR. And now amount to be paid, amount that is paid as per the books of accounts after considering creditors is 519 CR. But actual amount that is paid is only 67 CR. Meaning 451 CR that is shown as paid as per books of accounts is not paid. That means around 37% of amount that is to be paid. If you see combined data of 2021 to 2023, only 37% amount that is to be paid is actually paid. So I will just give an example for understanding how it is. Suppose I purchase goods worth 100 rupees, and in the year end, I will show creditors of 20 rupees. It means creditors will happen because party from whom I purchase materials, they may give credit period. So some creditors will be there. 20 rupees credit, if creditors is there for the purchase of 100 rupees, 80 rupees I need to pay to the party. That is how he presented in books of accounts. But even though he presented that 80 rupees is to be paid to the party, actually he paid only very low amount, like 20 rupees or 10 rupees or 20 rupees only he actually paid. Meaning the books of accounts has nothing to do with the actual payments and receipts. So there is so much issues in the books of accounts itself. SEBI started analyzing the say customers and suppliers. SEBI has analyzed top three customers, which is 100% of sales. Meaning they have only three customers, and these top three customers constitute 100% of sales. And they also analyzed top five vendors, constituting 98.99% of purchase of financial 2021. The largest say customer is Beamstar Holding Pte Limited. Beamstar Holding Pte Limited is a Singapore-based company, and they have almost done sale of around 86% to this particular entity, amounting to 81 CR, 81.31 CR, 31 CR. So the problem is Beamstar Holding Pte Limited is a Singapore-based company and it is stuck off in the what you call register of companies in Singapore. Meaning this company is stuck off. This company is not operating. And to that company, this company, our SeaCoast has exported. There is no bank credits observed from Beamstar Holding Pte Limited to Seacoast. So, SEBI has on its integration, promoters acknowledge that this all 90% of sales to Beamstar is fictitious, not genuine transactions. Then next party that they have analyzed is Alliance Bulk Carrier DMCC. 80% of purchase is from a single entity called Alliance Bulk Carriers. 11 invoices are provided by Alliance Bulk Carrier DMCC, and there is no bank transaction, there is no payments to that party. When the SEBI is interrogated, they found that all these transactions are fictitious. There is no payments done and there is no purchase done from Alliance Bulk Carriers DMCC. Then the other major parties are Essence. Essence, Essence is a both customer and supplier. They have purchased around 8.76. They have sold around 8.76 goods and purchased around 4.14 crore materials. For cargo freights, also they have sold around 4.43 crore goods. And there is a party called Voyages Overseas, which is a supplier who they purchased around 31 lakhs. You see, there is a circular transaction between Voyagers, Kogo, Seacoast, and also between Seacoast, Kogo, Essence. Means technically all the balance customers and vendors, they did only circular transactions. There is no actual goods or service movement. There is only money movement between these entities. So to show fictitious sales and purchases. So this is what has actually happened in this 2021 financials. Similar multiple transactions observed in books when investigated by SEBI. So SEBI has noted that 100% of sales verified and 90% of purchase verified. All the transactions are fictitious. All the transactions are not genuine only. And then they looked at the balance sheet. If you look at the balance sheet, there is no inventory. There is no fixed asset. The major part is creditors, receivables, debtors, and advance to suppliers. Trade receivable is 93 crores and it constitutes 62% of total assets, 62.7% total assets. Advance to suppliers is around 54 CR and constitute 36% of total assets. In the liability side, the major payable is trade payable, around 78 CR, and that is constitute 52%, 53%. And apart from that, there is equity, capital, and short-term borrowings. and some long-term borrowings also. So major parties, receivables, on the asset side, receivables and advances to suppliers, and the creditor side it is trade payables. So they just analyze the top major receivables. The largest receivable, of course, is Beamstar Holding Pty Limited, which is the largest customer also. SEBI has investigated and found that this sales is not genuine, meaning what? The debtors also not genuine. So 81.35 CR debtors is arising out of fictitious sales. Essence, second largest customer, is also arising out of fictitious sales. Cargo Freight is also arising out of fictitious sales. So entire trade receivable is arising out of fictitious sales. There is no money that is going to come from any of these parties. Now, in the asset side, the second largest item is advances to creditors. They made advances to Seacoast HCF. Technically, in 2021 they purchased the Seacoast HCF, and the ultimate what you call suppliers and customers of Seacoast HCF is also not genuine. So corresponding to purchase that cannot be traced only. Start chart, another creditors. Advance payment is also arising out of fictitious purchase only. So trade received. On the trade receivable side, creditor side, and trade advance to creditor side, all major transactions are fictitious. All major transactions are fictitious. There is no amount that is going to receive. There is no amount that is going to pay also. That is another interesting thing. In 20, there is another thing that is interesting thing that has happened is right issue. What is right issue? I will tell. Existing shareholders will get a right to purchase the shares of the company when there is right issue. So it is like I have 100 shares of Seacoast. So when there is a right issue of 3:5, it means that I will be having a right to purchase some additional shares issued with the issued by the company. So when they made right issue, the promoters have declared to SEBI that and we are not going to purchase any. We are not going to. It's not for SEBI. They informed to stock exchange that they are not going to subscribe anything from this right issue. Meaning only non-promoters are going to purchase shares. The amount that is received from right issue, they transfer this money first to 16 parties. Then that is again transferred to 75 layer of 75 parties. And this money got to some places which is not traceable. Technically, they have what you call this money is not traceable only. SEBI investigation, SEBI has asked promoters where his money is gone. They made a story that one of the promoters' son is abducted, is kidnapped, and proceeds are used for paying them as ransom. There is no FIR raised. There is no police investigation done. So this technically fake story that is being bought out. So this is they have whatever money that is being bought from the public as whatever money that is bought from the public by way of right issue is fully diverted by the promoters for their own some purposes. And whenever they raise capital, promoters also tried reducing their share in the company. They have what you call promoters have exited exited the shareholding in the company. So because of its Manisha, the managing director, by 2023 October, he doesn't have many shares at all. Similar for Samisha also. He by slowly both of them have what you call sold whatever shares that they have in the company and made profit out of this fake transaction, fake balance sheets and P&L that they have bought. So the financials look good when there is increase in top line and all, but actually there is nothing in the business. There is no sales actual. There is no actual sales. There is no actual purchase. Nothing is there in the books. So they just a cooked up financials is prepared based on that. The what you call because of the cooked up financials, they made what you call promoters were able to get good value for the shares and they sold those shares in the open market. Another interesting thing, annual report. We have discussed the financials. Financials are all cooked up. There's nothing purchased. There's nothing sales. There's all debtors are fictitious. All creditors are fictitious. All these things are there. Annual report also there is no proper classification. They didn't disclose any related party transactions. Related party transactions were not adequate. Auditor also failed to identify the issues in 2021. In 2022 only they made a general qualification and emphasis of matter. In 2021 there is no qualification itself. For your information, in the financials, there are three types. Auditor can give technically four types of report. First one is true and fair, a clean report telling that these financials are true and fair. There is no problem in that. Then he can give a modified report. He can give a qualified report, meaning that subject to this qualification, the financials are true and fair. Then he can give a adverse opinion, means he can tell the financials are not true and fair because of these reasons, and he can give an what do you call, he can also tell that he's unable to give an opinion because they don't have information. So these are the four type of report that auditor can give normally. In this case, he didn't give any qualification. Instead, he emphasized the matter. What auditors emphasized, he told that in the balance sheet we can see 70 debtors, 70 creditors, loans and advances. All these things we have to normally collect. We have to normally get confirmation from this party as per the auditor standard. We have to get confirmation. This is not whatever the value debtors, creditors and loans are subject to confirmation. Means they didn't get the confirmation, so they are not able to verify the amount of balance as the balance that are appearing in receivables and payables. Meaning, auditor has told that they are unable to verify debtors and creditors, and this is to be sad. To be For me, I'm a banker. I'm seeing a lot of financials in the tax audit report also. There also this comment is general comment is C that auditor is not corrected. Debtors confirmation, creditors confirmation. This is a very serious thing because this is one of the most important document an auditor rely upon to verify the outstanding of debtors and creditors. In this case, emphasis of matter paragraph name auditor just told that they are unable to take the position of debtors and creditors because they didn't get the confirmation. This is not a qualification also. They made an emphasis of paragraph. Since there is no qualification, management, the directors in their report, they just mentioned there is no qualification or adverse remarks in the audit report. Okay, as per the requirement, directors have to give justification for all the qualifications raised by the auditor. In this case, they have just emphasized that they didn't collect the confirmation from debtors and creditors. They also in the directors report just told that there is no qualification or adverse remarks. And another interesting thing that has happened in December 2022. In December 2022, extraordinary general meeting was held, and they passed by adding a new business in the object clause. So, in memorandum of association, there is one clause called object clause where they will mention what all business the entities authorized to enter into. In this, they added agri-business. In financial 2022, there is nil revenue generated from shipping business. 100% of revenue is generated from agri-business. 100% of revenue from agri-business. Nil from shipping business. What is the name of the company? Seacoast Shipping Service Ltd. 100% of business is from agri. Nil from shipping business. However, in segment reporting, they never commented anything about agri-business. They didn't comment anything about agri-business. Promoter later acknowledged agri-business is not GST business. Agri-business means there is no GST, meaning there is no traceability. So, to sow fictitious sales, they did 100% business agri-business, and there is all the business of fictitious nature. So there is no business that is happening in 2022 also. In the financial, they made so much sales. Again in 2022 they made so much sales, so much purchase, all sales, everything is fictitious. For that, it is the easiest way to do that is doing agri-business, and they didn't disclose that in the financials also. So that has happened. Independent director. There's an independent director, Sushil Sanjot, who is also chairman of audit committee, was linked to one of the customers. So in independent, the name he is independent director, but he is linked to customers. Audit committee meeting was never convened. In listed company, audit committee meeting should be convened as per the company said. They didn't convene only. Convened only. Auditors are not qualified, raised concerns of fictitious sales and purchase and preference shares. Nothing they did. Auditors have not found any mistakes in the financials. So, who bought the price? Who suffered a lot? It is the retail shareholders and banks. They are the persons who, relying upon the financials, suffered a lot. So, what do you call it? Is this report gives very important insight on why there should be corporate governance, why there should be monitoring mechanism, why there should be an audit committee, why there should be what do you call why audit committee is very important, why internal audit is very important, why statutory audit is, why good quality statutory audit is very important. This all these things are all this, if there is a good quality statutory audit, this issue would not have happened. This what do you call audit committee meeting was not convened at all. This internal audit, nothing was happened in the company. And this is listed company. Listed company has to do all these things. Nothing has happened. Because of which what happened? Person who suffered are retail shareholders and banks. So that is the impact that has happened because of all these frauds that has happened. So later what happened, I will tell. SEBI has told directors not to trade in the stock market, and they have around 5 years ban on trading of shares in market. So that is the impact that has happened. They have given order also, but the ultimate impact is going to be the shareholders. So uh, we as an investor or as a what you call as a banker, we look at lot of financials. We have to be very cautious. These financials are genuine or not. These financials are financials. All the data that is mentioned in financials like sales, purchase, debtors, creditors. We should do a thorough check that these are genuine. Sales have actually happened. Purchase have actually happened. So this without this when because there's a if there are bogus sales, bogus purchase, everything, then whatever money that is being given is lost. So that's what financials. There should be good from this case. What I understood is we should have good corporate governance. Audit committee should be proper. Statutory audit should be proper. Internal audit should be proper. All the mechanism that is there in corporate governance and the requirement as per Companies Act should be complied. Then, if that is done, then this issue would not happen. So I hope this video is informative to all of you. Thank you very much for your time. And if you like the video, please subscribe.